On a Monday, leading US media sources were certain that the Fed would cut rates by 50 basis points. However, yesterday, everyone seemed to forget those reports. The same sources started discussing a high likelihood of a 25 basis point cut instead. This shift allowed the US dollar to strengthen slightly at the start of the American trading session. Given the dollar's prior decline, the current movement could hardly be defined as a recovery. The US dollar index, which reflects the dollar's strength against a basket of 6 major currencies, remains near a 14-month low at 100.70 points. The size of the rate cut by the US Central Bank no longer matters much. The dollar has been weakened since the spring, when talks of easing monetary policy by the Fed Reserve began. The market has already factored in 1 or 2 rate cuts, totaling the expected 50 basis points. The first rate cut in several years will impress the markets and cause a temporary drop in the dollar. However, the overall decline will hardly be noticeable. Powell's speech will be more important. However, judging by the previous comments, he is expected to use his usual explanations, emphasizing that future rate decisions will depend on the macroeconomic data. In other words, the Fed chairman will hardly say something specific. A bit later, the market is likely to return its focus to the interest rate differential, which has recently widened in favor of the dollar. Once the dust settles, the dollar could resume rising. Such a trend could last for several months. On the trading chart, we see that the euro-dollar pair is recovering after nearing a local peak recorded on September 6. At that level, buying activity dropped, leading to a pullback within the upward trend. To continue rising, the euro-dollar pair needs to stabilize above 1.1150. In this case, the euro could recover after the recent correction and hit new highs in the medium-term trend. However, technical analysis is of a secondary importance today, as most traders are focused on the results of the Fed Reserve meeting. As for the oil market, tensions in the Middle East boosted market volatility, thus pushing oil prices above $74 per barrel. Although oil inched down later, it still remains above $73 per barrel. If prices stabilize above $73, they could climb towards $76. If buyers fail to hold this level, the correction could pause. It's clear that the next steps depend on the reactions of this region's countries, especially Iran. The Islamic Republic uses recent events in Lebanon as a reason to escalate against Israel. This could increase risks of the region, which is very important in terms of energy supply. Against this backdrop, oil prices may rise even higher. The situation with the ruble remains stable, with no significant changes in recent weeks. Experience suggests that this stability could last for several weeks. So far, there are no signs of any changes in the current situation. From a technical point of view, the yuan-ruble pair is trading near the peak of its upward cycle, indicating that buyers of the Chinese currency are in control. For further growth, the price needs to consolidate above 13 rubles. Otherwise, fluctuations within the range of 12.5 and 13 are expected. That's all for now. We will continue to monitor the market reaction in the financial markets. Subscribe to our channel and stay informed with us. See you soon.